Tuesday, September 29th, 2020, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at the precious metals bull market, how I think gold and silver are going to become even more rampant, the bull market in those metals. And by that I mean it's going to be even tougher to hold on to the bull. It's going to get very volatile, as it has already been for the last couple of months. It's going to get scary for those who haven't done their homework, who haven't looked at the history of money to understand really what gold and silver are. For those who trade gold and silver as speculation, that's a totally different story. But I think we are at an important juncture, especially at the end of the month here, end of the quarter. So we're going to look at some charts today. Before I do that, though, I like to talk about the fact that even politicians or MPs here in the UK are starting to wake up to what I think is an engineered crisis. Yes, some people might argue that the government has been incompetent and they've exaggerated about this health crisis. I personally don't think so. I think there is an agenda, and I've been talking about that for months. For my new viewers and subscribers, I recommend you read an article I wrote on June 11th in my blog, maneco64.net. I don't write too much in that blog, but sometimes I do. And this article talks about the powers behind this crisis, in my opinion. And it's entitled "The Origins of the World Economic Forum Go Back to the Third Reich." Yes, it does. Read the article and you see, and I'm using data from them. So I'm going to put a link to this article below in the description. But it's very encouraging. Now, even the FT is talking about it. They're saying that Boris Johnson is under pressure. It says Boris Johnson orders peace talks as Tory rebel angers grows. I think the powers that be have overstepped their mark with all the draconian measures that they've imposed and are continue to impose. We thought back in March that it was going to be a few weeks or a month to flatten the curve and then everything would go back to normal. But they keep cracking down. They keep forcing people to wear things they don't want to wear. And there's an MP called Desmond Swain, and he talked about that in Parliament. It was a great speech. He noted that this virus is number 24 on the list of lethal diseases in the UK. And he finished his speech by saying, yes, we may have a pandemic in the future, a very serious one, but this is not it. I think it was great. And even the FT mentions him. I recommend you go to Carl Vernon. I'm going to put his video up in the cards and below in the description. He's published Desmond Swain's speech. So that is encouraging. The video from Carl Vernon is entitled "Stopped Project Fear, Desmond Swain MP." So there you go. People are starting to wake up, but also the politicians. Let's see how that works out. I have a feeling that they've overstepped their mark. He's very critical, this MP, of the scientists advising the government. And scientists that are actually heavily connected to commercial entities, right? So let's get back to the market, to gold and silver. Let's look at some charts here that I've looked at this morning. I remember talking about how it was quite bullish back in July when we were able to break through 1825, right? And why 1825 in gold? Well, because that was the highest monthly close ever, and that was back in August 2011. we ended up closing July at 1974. So the gold market, precious metals market, was going up like a rocket, right? And so for the last 2 months, we've corrected. And I have to admit that I thought the correction was not going to be as long. It's been almost 8 weeks since we made the all-time high back in the beginning of August, around 2075 in gold. I did think we could, of course, pull back to the breakout area, which was 1921. That's the all-time high. But I also said that 1825 would be a possibility. We haven't gone back to 1825. The low so far this month has been 1849, and right now we're around 1880. So we've got 1 day left for the month of September and 1 day left for the third quarter. And in terms of the quarterly close, as you can see here, the highest quarterly close was the third quarter of 2012, actually, when gold closed at 1772. It wasn't in 2011, which is unusual, right? So we're comfortably above that level. So I think the technical picture still looks good. Yes, it's been quite scary and choppy. Of course, there are a lot of naysayers about the precious metals, but as I said before in the beginning of this video, if you've done your homework, and why do I say that? Well, because that's how I was convinced that precious metals were a good place to insure some of your savings in terms of holding fiat currency in the bank. And the process for me started when I purchased my first gold coins back in 2002. It led me to look into gold. It led me to look back at history. And I think history is very important. And it led me to actually learn about how important the precious metals have been as part of the monetary system. Up until then, I did believe in free markets, in small government, but I hadn't realized how important precious metals were for having a free society, free markets, and sound money. So, and that's what converted me to stick to the precious metals, because studying current events and looking back at history, we can see that our politicians, our central bankers have become totally irresponsible, of course. They have nowhere else to go but to keep indebting the system, increasing the supply of money and credit. And if they don't, of course, everything collapses. And in a collapse as well, you want to have insurance outside the system. So that's what I mean. So let's look at another chart here of gold before I look at silver. And this one here is using Fibonacci retracement, as you can see. So yes, I do admit that 2 or 3 weeks ago, it looked like we're breaking out of this. It was an old pennant, right? But now it looks like we're forming a falling wedge here in gold, and that is also positive. But I've done a retracement analysis of gold going back to the low of March, which was 1451, to the high in August, which was 2075. And as you can see, 1836 was the 38.2 retracement, Fibonacci retracement. We didn't quite get to that level, but we got to within $10 of that level. So I think that's a pretty good indicator there. So now we'll have to wait and see to see what gold does over the next few days, next few weeks. What about silver? A quick look at silver as well. So I've done a Fibonacci retracement analysis, the low in March, 1133, believe it or not, to the high in August at 2987. So there you go. The 38.2 retracement is 2278. Yes, we've gone below that, but that's how markets are. They're not perfect. It's like the seasons, right? I got a picture from my nephew in Switzerland, and this is September, and there was snow on the ground, and it's very early for Switzerland, even up in the mountains. You usually get your first snow around November. So yeah, things are not perfect in nature, and I would argue that markets are a bit like nature, and that's why these retracement levels, the golden mean, that's why people look at it, I would say. So yeah, the important breakout for me was around 2110 in silver. Did we retest that? Well, not fully, but we got down to like 2160. I would say that's quite a good retest of the breakout. So again, yes, the consolidation or correction has been sharper in silver as well as gold, but I guess they did get a little bit out of hand in terms of the upside, and I think we're going to have a lot more instances of these very volatiles, these huge moves higher, these huge moves lower, but we're going to keep seeing higher highs and higher lows because that's what you get in a bull market. So to finish off, let's quickly look at where the markets are this morning. So we've got spot gold right now. It's just gone past 9 a.m. London, by the way. Spot gold is at 1880.60, down $0.50. Range has been 1871.60 to 1887.70. Silver is down 9 cents here at 23.55. It's had quite a wide range. We've been as far up as 23.85 and as far down as 23.36. The Dow future is down 113 or 0.4%. S&P is down 11 or a third of a percent. NASDAQ 100 future is down 0.2 at 11,340. The FTSE is down 80 or 1.3% at 58.65. Yeah, the FTSE got almost to 7,000 back in 1999 during the dot-com bubble. And here we are 20 years later, and we're not even back to 6,000. Currencies, sterling rallied yesterday quite strongly. It continues to see it go a little higher. I think it's a little bit of month-end short covering in sterling. Of course, we were around 135 a few weeks ago. Right now, sterling or cable or the British pound is up 0.25% at 128.67. The euro is unchanged, 116.69. The dollar is up slightly versus the yen at 105.60. WTI crude is down 35 cents, just under 1% at 40.30. To finish off, the 10-year yield is down 1.2 basis point at 0.65. So yesterday we had a big update in the stock market, and yields did not go up. The fact that we're down slightly here this morning in the stock market and yields are down is not a good sign. Even though I saw an article on King World News that there's a huge short position protecting on the downside in the NASDAQ, and that is usually a reverse indicator for the stock market. It could be that we could see a short squeeze, according to King World News. But I have to say, the bond market is not pointing to a really strong economy here. Of course, yeah, the Fed could intervene in the stock market or could intervene in terms of adding liquidity to the system. And that would drive stocks higher. But would it mean anything? I mean, we've seen in countries like Venezuela, Zimbabwe, Weimar Germany, even Brazil, when the economy is not doing well, but there's a lot of monetary inflation, the stock market does really well, and it's not really an indicator of the health of the overall economy. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.